Shahab? Okay, so yesterday I was talking about this line in NASDAQ, which, I had drawn on the weekly for quite some time. This little lime green wedge line. You could see it pretty good on the daily here. All right, off this high, off this high, off this high. Okay, that could be a three driver, right? Anyway, it's a wedge. So I talked about it hitting that wedge line and that there was potential for a throw over, which you can tell we had right here. Okay. So I said, what do you do here? You put on a piece. We were here, and then you let the market do whatever it wants over the throw over. But I began to become suspicious of it right here, that it was just sitting on it. There was no dramatic follow through or acceleration above it. And then I said, well, next time inside of it, which was this candle, you could short it. Okay. So it turned out to be a real nice scalp. I'm still looking ahead towards next week, but you never know when something's going to turn into uh, a top or the top. Everyone with me? Yeah, it'll stop going down when the yen peaks. Okay. Start paying attention to the yen, Shahab. And what may give it, good morning, Brock, John, pub time in the UK. All right. So we're still higher on the week, as you can tell by the weekly candle. Not a lot, maybe another 40 points. And we're not going to have a 2 week reversal unless we really accelerate to the downside. That's at 80, 1880. So that's not going to happen. So to look for the gold to stop going down, you need a high in this. Okay. You're starting to get some divergences here. I still think we might see the 110 handle. And you also need this to turn. And I think, I'm not sure, maybe it was Grega, but 9830 was a potential rally point for a continuation decline. So we're in an area right now in the Dixie where, oh, look at this moving average right here. So it's Friday. Sometimes, Friday is kind of like follow through. You don't get a lot of reversal days on Friday, although I've seen quite a few, but normally you just get follow through into early next week. But here we are in the dollar. Um, I still think that this was where we're going, and this could just be a corrective bounce. And if that's so, we could still be headed. Okay, buddy. We could still be headed lower. So, dollar at a critical area. Same with Swiss. You look at the Swiss right here. Could be the same thing. ABC. I'm still short. I'll get out over a buck. But I actually think this is, if I'm right about one more wave to the downside, I actually think the Swiss is going to lead it, and it's really based upon this 4-hour candle. Look at this 4-hour candle here yesterday compared to the 4-hour candle that we had in this was yesterday, or this was yesterday in euro. So I mean, this candle was much more dramatic in amplitude, and we didn't take out yesterday's high in Swiss, while we did take out yesterday's low in euro. Everyone see that? Daylight savings time started last week. Same time. I don't know about. Hi, Monica. Anyway, who wants to hear a song? Anyone? Stuart, you want to hear a song? Brock? Yeah? Well, turn on your radio. We have a new policy. Yeah, we have a new policy here. I only sing in private members chat now. I do a daily concert in there. So if you ever want to hear me sing again, you got to do this. You want to listen to my songs? Monica doesn't want to hear me sing. Raj, my target, if I'm right on Swiss, under 97. Hi, Madraz. My name's Dale, not Dave. Dave's not here. You ever hear that? Cheech and Chong, Dave's not here. Well, you know who is here? One of the most talented, honest, and nicest guys you're ever going to meet in the business, in this cesspool of barracudas and sharks.
Thanks, Coach. You shouldn't really. Thank you, though.
You know what? You are. You are. You're. I know this. Blake won't care. All right. I like you a little bit more than Blake. All right, buddy. In fact, I like Blake. I love you. All right. So anyway, how's that?
I'll take that.
All right. So anyway, what's the go on the oil? I'm looking for one more push next week into the full moon, when I get back from my date with a vampirist. I showed the guys a picture of who I'm going out with this weekend. So Blake is back, and Blake, Friday, still some, strength in the Dixie. Do you think there's a chance to turn in this area, both in the dollar and the euro? Share the photo.
I don't know. I don't know. And good morning, and TGI.
Hey, good morning, buddy.
And
let me turn this off. Yeah. Okay.
Yeah. So, well, as far as trading this week,
yeah,
I'll tell you, that wasn't. I've been trying to claw myself out of a hole this week. So that's there's that. But the U.S. dollar, Norwegian krona, yesterday, fortunately, treated me really well. So at this point in time, like looking at the euro, we got this double top. I actually tweeted it that we have this double top. We are at the 50% retracement. I'm not trading the euro right now. Okay. I'm leaving it alone. If we reach the double top target, which would be 109.70, I'd be willing to go long down there. I might actually even be willing to go long just below 110 if we actually reach there. Here, I'll show you the screen.
Okay, buddy.
I'd be willing to pick up the euro down here at the 618. But right now it's kind of in no man's land because we got this double top working.
Yeah.
We have a descending wedge, so that's conflicting, right?
Right.
So it's like, it's
a Friday.
It's a Friday. Do you want to go long here? You could.
Yeah.
But what are you looking for? I mean, what are you looking for? Just maybe like 20 pips. It's not.
So back above 1064 would be kind of positive.
Well, yeah, I think a move back above 1060, 1060, 1070, somewhere up there would be. It'd be a reversal, catch everybody on the short side. Okay. But for me, like, what am I going to do here? I have other things that I'm doing, so I'm not. I don't want to deal with the euro right now. Like I said, it when we failed up here at 110, 111.70, I should have just taken everything off, and instead I let myself get, I let myself get stopped as it was moving down towards support, and I mean, next trade, exactly.
Yep.
So, but like I said, this would be attractive for me to be on the long side because I am actually still a euro bull. Well, let me rephrase.
Dollar bear, maybe.
I'm a dollar bear, so okay. I'd be willing to go long down here, not at current levels. I mean, and it could reverse here. Like there are signs that it could, we've got relative strength that's divergent. We're coming into the 50% retracement. It could very easily just bottom right here and today, and then that's it. And then next thing we move back above 110.70 going into early next week, and everybody's chasing it higher because all the shorts are getting squeezed, and then everybody who's long or wants to be long, like myself, it's like, oh crap, this is a false breakdown, so I'm going to go ahead and reverse. So for right now, I'm just, why touch it here? Now down here, I'd be more interested. Like I said, can we get down there today? Probably not. Maybe, I don't know. You look at gold. Gold's getting smashed. We went through support here at the 1460 level, so we might actually reach flag support, which would be down here at at 1430. So if gold continues to extend its losses, then I'd be willing to keep an eye on the euro, because it might drag the euro lower. Real quick, just there was some news out this morning. Let me go ahead. Or actually, Navarro. Here you go. This is Navarro says U.S. willing to postpone December 15 China tariffs. That's via Fox, meaning they are not willing to roll back all of the tariffs. They just want to roll back some of them. They want to keep some for negotiating power with China. The dollar yen came off a little bit as a result. The S&P futures came off. NASDAQ futures came off just a little bit. But, you have to look at the dollar yen. It continues to hold up really well. And there are, I think, two people that you really got to pay attention to regarding the trade war. You got to pay attention to Donald Trump, and you got to pay attention to Pete Navarro, and that's pretty much it. And so right now, the sticking point with the China-U.S. trade negotiations is what's happening with the tariffs, and what they're going to do with the tariffs before all the parties sign. And then obviously I think I forget what the name of the chief trade representative in China, what his name is, but those are like the only people you really want to pay attention to. There's a lot of noise out there regarding China trade, so you just have to be very, careful regarding trading all these headlines. Now, this is a negotiation process, so obviously being at the very tail end of it, that's the very last few details that they're dealing with. But all in all, look, I feel that Donald Trump is still, it's a good deal or a bad deal, he's going to sign a deal. He's going to do it before the election. I know I've said that a lot, but he's going to, and it could be a bad deal. What's to stop him? And let me ask you, and Stelios or Steve, if you want to chime in on this, you can. Dale, if you're listening, you can. I know you had to step away for a second.
No, I didn't go because I wanted to.
What's to stop Trump signing a trade deal, and let's say he gets reelected, ripping it up?
Nothing.
No.
But I do have one thing to say that happened last night, or that I saw in the news yesterday. And remember, I was talking about that he may open another front in the trade war next week with the EU. I think it's the 14th.
No, I think it's the 12th. It's the NATO, right? Yeah.
Okay. It's the
14th. Is it 14th?
I'm not sure, but it's about European trade. But
okay.
You brought up NATO, and that's what I was going to talk about, is Macron's statement about Trump turning his back on us in NATO. I don't think he likes that kind of. I don't think he likes that, and I think that might even give him impetus to say, "Yeah, you're right," and open up that second front in the trade war next week.
I don't know. I really don't know. I think his popularity is waning a little bit. He's got Michael Bloomberg's jumped in the race.
Yeah.
I don't know. He's probably getting a little nervous, and he probably wants to start getting things done to make himself look better. Now, Dominic said no need to rip it up since China will not abide by the agreement. I beg to differ. I think China is actually hurting a little bit. I think that they want to get it, some sort of deal done, but it's going to be more on their terms. And like I said,
the question is who needs it more?
Trump needs it more, and they know that.
Exactly.
So Trump's going to sign a crappy deal. It's going to be, he'll probably run on a look. I did a deal with China, and somebody like Michael Bloomberg, if let's say it's him debating, he's going to go, what did it actually accomplish, other than probably some GDP slower growth globally, and he's going to shoot holes in it, but he'll still run on the premise of, I got a deal done, good or bad, I got a deal done. And remember, we've seen this for the last 3 years with Donald Trump. He will say whatever he wants to say because he believes it, whether it's true or not, and people will back him because they'll say, yeah, he did a deal. It's a bad deal. It wasn't a deal. It was a deal. He did a deal, and it just goes around and around and around. But that's just how he's operated the last 3 years. So it doesn't, to me, it's like he needs a deal more than China. China, might do it if it's on their terms and they can remove all these different tariffs. But I think a deal is going to get done. Personally, I'm still, and look, what's telling us here that it's probably going to get done? Just take a look at the bond market. Bond traders are always the smartest traders in the room. Always. Take a look at the 10-year. 10-year has broken. It's broken a year-long trend line, and we are moving lower. Yields are going higher. And that, to me, tells me that this market's going to, it wants to get something. Something's going to get done here. I'd be surprised if it doesn't. But like I said, I think those are my thoughts. Okay. And Dominic, you may be right. I'm just saying that this is my opinion. My opinion is just an opinion. Opinion are like buttholes. Everybody's got one. So, that's mine. All right. Stelios, Steve, you guys want to comment any on that? It's fine if you don't.
I was about to say there's nothing to stop Trump from backtracking, obviously, apart from him losing his credibility. No, wait, doesn't have any left. But yeah, he could easily do that. Absolutely right. And the other thing which a few people have been talking about on the chat room is that the US-China negotiations are now turning into Brexit, aren't they?
Yeah. A long time ago, I think.
I mean, this has been a long time coming. And real quick, I want to. This is an argument that I had with with my office. Not an argument. I was say it's argument. It's not the correct terminology here. We were having a conversation about how the dollar is going to respond, and when would you say the trade war started?
Good question.
Effectively, when we got the first tariffs implemented.
Which was?
Don't remember exactly.
I want to say it was the if I'm not mistaken, we got announced. It must have been last year, November. Well, I know it was in maybe October or September of last year when
might be the case
when trade war. When the reason why I know that is because my wife had ordered. You guys. Most of you know the story. My wife, for a company, she ordered a bunch of boxes for her company. Her $20,000 order was for her because of the tariffs. She is American, and she's a U.S.-based company. She had to shell out another 10 grand for tariffs. It was like $22,000 order of boxes that came from China because they were like magnet closed, blah 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 for her business. And she took the hit, right? That was, I want to say November, October of last year. So like right here, right? So that's when the tariffs took place, right? Somewhere in there. So when do you think a trade war was announced, or that Trump was going after China? If I had to guess, I would say summer, maybe somewhere around here, right?
Even as a candidate, Trump was attacking China. So,
Right. But like when we he started really heat up the trade war. So I guess the question is, or the point I'm trying to make here is, what did the dollar do and we've talked about this over the last year and a half, 2 years. What has the dollar done in response to a trade war? The dollar has acted as the risk proxy in the trade war. As the trade war is heated up, the dollar has strengthened. All right, things would cool off, the dollar would weaken, the euro would bounce, then things would heat up again, the dollar would strengthen.
That's also, sorry to interrupt, with the Fed doing 180-degree turn and cutting rates quite a few times, right?
Right. Yeah, exactly. ECB's just stayed pat. So you had the dollar really strengthening, and you could see it's not dramatic. It's just it has been. And every time we'd get trade war escalation, the dollar would firm up, and the euro would break down because all the yen pairs would. So if we finally get a deal, I still feel that the euro is going to be a beneficiary there. Do I think Europe has its own problems? Yeah, of course I do. Sorry, you guys that are all in Europe, and including my two partners in Athens. But I do believe Europe has its own unique set of issues. However, it's also a big funding currency too. So I still think that the euro could really significantly rally when a trade war there's a ceasefire, if you will. And that's why I think that you gotta be really careful being on the short side of the euro. I haven't bought into the argument that the dollar is going to be the safe haven of choice on a sell-off in risk assets. And that goes back to our argument from, here's the dollar index, guys, just so you can see. Here's the dollar index, but more importantly, compare it. Actually, let's do 500. Crap. That doesn't look as good as I wanted it to, but that you can see the dollar, even on these sell-offs, the dollar, when we'd sell off, like even the last time, the dollar, came off as well. And a lot of that is because unless the market is really convinced that the stock market is really reversing, I'm not sure that the dollar is going to be a safe haven unless we're really convinced that the S&P has completely reversed. And then at that point, I think the market will start running for the hills and looking for dollar denominated assets, or the dollar in general. So that and that's if you could actually the better chart to use is do this. Okay, you can see in all of these sell-offs that we've had, this and this is the real key barometer here, is looking at this trend line. Looking at this trend line here, even when we sold off to this trend line, the dollar didn't go up. It didn't, and I can do this, I guess. You can see during the sell-off here, the dollar actually went down. It's not like it was, rising as a result. Same with here, when we sold off here, dollar was kind of going down too. It'll become a safe haven, a safe haven if everybody's, I think, really, really convinced that the dollar, or excuse me, that stocks are completely reversing. But as you can see, the stock market is, still pretty strong. So anyway, just a few, just some food for thought there. I guess one thing I want to cover just before we go, Canadian data is coming out in a few minutes. I got to go for that. But the dollar Canadian probably to me has been one of the most challenging currencies to trade. So I haven't been trading it because it has been extremely messy. We actually had a false breakdown of this major trend line here. You can see the major trend line will come up as the data fills in. There we go. We had a major breakdown of this major long-term trend line and reverse. So that false breakdown there, gives me reason to believe that we will break higher. Some of the bank research that I've been reading this week regarding Canadian jobs feel that the Canada is towards its end of its cycle for job growth. So be careful of, we've seen recently strong Canadian job data. If it comes in weak, you might get a dollar Canadian then trades back up towards the 200-day moving average, which is at 132.70. So just keep that number in mind. Remember, the underside of this trend line comes in at 132.40, which is only about 40 pips away from where we're at. 618 is right there too. You can see the 618 right here. It's, like I said, it's a very messy chart. And it's, the dollar Canadian has not been my trading vehicle of choice in recent months, just because it's been so messy, technically, and I think everybody's kind of up in arms what the Bank of Canada is going to do at this point in time. So and I think there's a lot of debate on both sides of the argument there. So anyway, just watch the dollar Canadian. I think we're going to have pretty good support at 131, pretty good resistance here at 132.40, 132.70, just in case it is a weak piece of data and we actually spike higher. So guys, happy Friday to you. Steve Stelios, I'm going to pass it over to you. I've got to get to the markets here.
TGIF, mate.
Yeah, TGIF. You guys have a great weekend. It is Veterans Day on Monday. So I'm taking like part of the day off, because my family and kids like to celebrate Veterans Day for me. But
are banks open, Blake?
I think I have to look. The markets
are open though.
Markets
right?
are open. Yeah,
Okay.
yeah. I mean, I'll be here in the morning. I'll be here in the morning. I just don't know how active I'm going to be. But just keep in mind, and I think people will chime in and tell you that maybe the bond market's open half day. I'd have to go double check that. But for those of you that have served your countries, no matter where you live, happy Veterans Day to you. I know
no matter the politics, you have to be for the troops.
Exactly. You guys have a great one. Thanks, everybody.
Hey, enjoy the weather, Blake.
Oh, it's beautiful here.
Yeah.
See you guys.
You got through hell again. All right,
Enjoy,
guys.
bro.
All right.
So,
hey, Stelios,
before the data, just one more comment I want to make about China and US. Navarro actually did say that the US is willing to postpone the December 15 tariffs. Didn't say cancel, did say postpone, and it just shows that they're on a completely different page from the Chinese. So the Chinese want to do all or nothing. The Americans are kind of playing it, trying to play it smart. But at the end of the day, I think I agree with Blake that I think Trump needs it more. And I think what's going to happen is going into the elections, he's probably going to take a few steps back and accept something which is, less than optimal, but he needs it. He absolutely does. So that's
you think he's going to show how tough he is by opening this second front in a trade war still?
With Europe?
Yeah.
He could do. I mean, I really don't know. I can't anticipate what he's going to do. Very unpredictable. Exactly, yes. So, just my thoughts on this shenanigans.
He's mad at his buddy Macron for saying things about him.
Yeah, on the other hand, he says a lot of stuff as well. So,
yeah. I know, but that's okay for him.
Yeah. Okay, let's have a look at the Canadian.
All right, you don't want to talk about it anymore.
No, I just don't have that much more to say.
I know. What can you say? The whole country's thrown their arms up in the air.
Bad Canadian data.
Red.
Oh,
red,
yeah.
yes.
Canada.
Bad Canadian data.
All right.
participation and unemployment the same, but building permits quite worse than expected and revised lower. Employment change negative 1.8K versus 15.9 positive. That was the expectation. So,
Wow.
yeah. Okay. So
Hey,
we
do you
got
know, Steve, if there's any kind of tell, like Canada going into recessions prior to the U.S. doing it, like they kind of lead, or you know, or does it take the U.S. for Canada to have economic problems, or can they have them all on their
definitely
own?
the level of fiscal stimulus is less, so that might happen.
You mean monetary
No,
stimulus, fiscal, huh?
no. I'm talking about fiscal stimulus as well.
Less in Canada.
Just check. For example, during Trump, during Trump's presidency, public spending contribution to GDP is strongly positive. If I remember right, it's like something like 0.56%. While, for example, just to give you an example, under Obama's presidency, it was not exactly zero. I think it was actually below zero.
Okay.
So I've talked about this in the past as well here. It's not only the fact that we have very loose monetary policy, because I remind you that the core CPI is running above target for quite some time now, right? But it's also the fact that we're cutting again, and we're doing the most aggressive quantitative easing we ever had. They don't even want to name it quantitative easing, but I remind you that within 7 weeks, we've had $250 billion increase in the balance sheet of the Fed. So we have a lot more public spending. We have a lot more of the employment coming from the public sector than it used to be in the past. In essence, the US has thrown everything, including the sink, in the fight to avoid going into an official recession. Guess until when? Until next elections, right?
Yeah.
So plus the fact that, as we've explained multiple times, it's running a deficit that's somewhere between 8 and 9%, which is like preposterous. It's like multiple times what you see in any other developed economy, like 2 to 3 times higher than the worst.
Yeah, and Italy is being punished for running, what is it, 3%, whatever.
Yeah, and the US is running something between 8 and 9%. Yeah.
Makes sense.
Yeah. So, it's all about keeping a ship that is full of holes still afloat for another year. Now, will it be successful? It depends. It depends because, as you know, sometimes, something unexpected happens, and then, everything unravels. They're also going to need quite a lot of luck to manage to push it for another year. But, nothing is impossible. We'll have to wait and see. Data have definitely turned down, employment data and every other type of data. I mean, even GDP, this year's GDP will be somewhere in the vicinity of 2%, right? After all that, we're going to have like a 2% GDP. And that is without even considering the fact that the GDP deflator is completely, manipulated. So in essence, we are deflating by using inflation numbers which are not even real. So we'll see what's going to happen. So one thing is for sure, the USD CAD has responded higher following the data. Nothing really to write home about. I mean, we can rebound further from here. Once again, I would have to say that 133.50 is going to be a very strong area of resistance. I'm also monitoring this RSI trend line resistance. We're currently testing it. Let's see if we can break higher from there. Obviously, the bigger moves today and the moves that have attracted more attention have to do with what we see in gold and silver. If you remember, we warned several days ago that, listen, it's not unlikely that gold and silver are going to post lower lows. For me, that changes nothing having to do with the medium-term outlook. I'm still very bullish. I think that now gold can come down and retest this trend line, or even a little bit lower, like towards 1430. You can see we have a horizontal support resistance area. But I'm definitely going to be looking somewhere there. I'm going to be looking to start building a long position. But we might see more downside, and silver more aggressively moving to the downside. Today, it actually retested this broken trend line resistance as support, at the same time confluencing with this horizontal support resistance area at 1670 roughly. So let's see if it can find some support here. Same deal with silver. I mean, I don't think we have found a high here. I think that we're going to resume higher sooner rather than later. Now, obviously, this has led the gold-silver ratio to break out, and as it seems that one more leg higher that we were looking some time ago is going to, is unfolding with a little bit of a delay. I would be looking for the 88 area, which is the 61.8 as possible resistance here in the gold-silver ratio. Not unlikely to move a little bit even higher from there, like towards like 90. But I do think that also the gold-silver ratio, anywhere between 88 and 90, is also going to provide a decent opportunity to look
Buy
for
silver, sell gold at that point.
Yeah, if you want to play the gold-silver ratio, yeah, absolutely. That's
Or
the way you
just
look.
be long metals at that point.
Yes, because we know that when the gold-silver ratio is moving lower, that is generally an environment when both of the metals are thriving. Just when both of the metals are bid, usually silver is overperforming the moves higher and underperforming.
And lower.
Yeah, exactly.
Okay, got it. That's a great idea for timing long entries. Looking for, resistance on this gold-silver ratio. Thank you, buddy.
Mm-hmm. So we had questions about crude. Now, having to do with crude, it's the 5th consecutive day that nothing really has changed. If you remember, we were saying that again yesterday. Yeah. I mean, look at this. This is a very resilient area. This confluence of the 200 daily moving average and the 50% fib at 57.22 is a very
Can't
resilient
close
area.
above it. Yeah.
No. 5 consecutive days we've tested.
Wicks above it, but no body.
Exactly. We've tested the waters above it 4 consecutive days, actually, because today we didn't test the waters above it.
I don't know about you, but, bodies are real important to me. I'm not just in trading.
I totally understand what you mean.
Oh, you understood. Oh, okay.
Depends on what you're looking for. I'm one of the lucky ones that I think, managed to combine.
Oh, yeah. Good thing she didn't care. Just kidding, man. All right. Anyway, sorry.
So
I'm fried. I'm a piece of toast by Friday, Steve.
No, don't worry about it. I feel you more than you can imagine. So is it unlikely? Does this mean that it's unlikely to see another move higher? No, it isn't unlikely. But I have to say that this area is holding up like a champ, and at any given point, crude is in danger of rolling over, especially considering the fact that
the S&Ps, yeah.
With the S&P being so close to resistance, with the Nasdaq being at resistance, right? Multiple confluence of resistances here. Look at those 4 consecutive pin bars.
Yeah.
Exactly on top of this triple confluence of resistances. It's this ascending wedge, a 127% extension from this move lower, and a 127% extension from that move lower. Now, of course, this might prove to be a bullish consolidation before another thrust higher. Yes, it can actually happen. And the trend is your friend. But I don't consider it a coincidence that we have stalled exactly at this area. So if it happens that indeed we see indices rolling over from here, it's more than certain that crude is going to accelerate lower after all those failed attempts to break through 57.25 to close above 57.25. So that's what I think about crude, because we had quite a lot of friends asking today about it. Let me open the chat box and see, because we had quite a few questions. What do I think about the USD against the Singaporean dollar? Okay, sure, we can have a look at it before we go to more mainstream things. There it is. Not much, as you see. I mean, very nice. That was a nice trade back then. We had indicated that, the breakout from this descending channel. But if you look now, I mean, you know, we've been oscillating more or less in some type of a range. So I have to say that, you know, as long as we're above like 134 and like below 140, you know, you have to respect this range. Okay. So no real trend since we found a high here. So as I said, I mean, we're getting closer to support. Might be a good opportunity to try the opposite side. But if we do break below 134.50, I think we're headed a lot lower. Okay. Thank you for the kind words. You're wondering if we read the chat. Yes, we do, as it's obvious now. Have a good long weekend to you as well. There is similar scenario, market situation 94, 95 as present day, with Fed tightening followed by cutting, indices flying. Just a thought. Yes, Thomas, that is a good point and a good reference on one hand, but on the other hand, we have a very different situation here. And the very different situation is that one of the reasons that managed to prolong that business cycle was the explosion of the development of the internet, which indeed created a lot of growth. So we had the coincidence, lucky coincidence for Clinton back then, of, you know, getting a lot of growth coming from, you know, this industry that, you know, like blossomed, you know, like extremely fast, A, and B, the situation of the US and global economy was much better. C, we weren't already in the most prolonged business cycle we ever had in history. So, I mean, following that boom that you're talking about, we rallied for another 4 or 5 years. Now, if you're asking me what I think is the possibility of something like that happening again, my answer would be something like 0.0001%. We're going through questions to see what else. Seems like a double top in yen. Yes, we're going to have a look at yen. Silver, we covered silver. Crude, we covered crude. Okay, yeah, I have more things to show you. Let's do quite a lot of questions today. And more here. What's your target? Dale, a question for you. What's your target in USD Swiss? Actually, there is a question for you. Okay, yeah, I think I covered that. So Dale, I guess he's not here now. Target in USD Swiss. I can show you what I think about the USD Swiss, and then Dale can give us his input. USD Swiss has definitely been trapped, as you see. I mean, we have this horizontal support area, we have that resistance. So between parity and like 98.40. So, you know, it's as simple as that. Whichever of the two breaks first, parity or 98.40, we're going to get an extension one way or the other. Okay. So, you know, that's what I would be looking for here in USD Swiss. There you go. Anything in between, in my opinion, is simply noise. So don't get chopped up in noise if you want my personal point of view. Now, we had a question about a possible double top in yen. Not sure what you're talking about. Are you possibly implying taking into account that high there? Yeah, I mean, we're currently testing that high. So in order for us to even have a discussion of a possible double top here, we would first need to see a move lower and then start even having the conversation. Because for the time being, what we have had is the USD yen stall at an area of support, moving higher from there. And we kept saying it here. I mean, that, 108 is important support. So let's see what's going to happen from there, because, we might actually move higher from 108. We did that. Yeah, momentum is not that great. There's no question about it. But, I think it's too early to have any double top discussions. For the time being, I think, that being cautiously constructive on the USD yen makes more sense than anything else. That's what I believe. Now, another pair I wanted to show is once again USD SEK, because as you see, USD SEK is accelerating higher once again. If you remember, we talked about it when we were testing it there. So a nice move higher from the USD SEK. So, I think we might just, stay trapped within this ascending wedge for longer, right? So I think this has been working out nicely so far. USD NOK, not exactly the same situation here, because as long as it stays below like 917, 918, there is still a possibility of a move lower, but crude will have to play ball to somewhat help the situation here. So USD NOK might as well move lower from here, but we need more evidence. I mean, so far we have a consolidation. I need to see an acceleration lower in order for me to consider this an actual ascending wedge that has broken. Now, if you've noticed, one of the pairs that is holding better than anything against the dollar is the pound, right? And you shouldn't take that lightly, because I think this also shows that this market is very strong. And once the dollar moves lower again, I think one of the first ones that are going to be breaking higher for at least one more leg to the upside towards 133 is the cable. So being bearish the cable, I think, remains a very, very, very bad proposition, right? Very bad proposition. Now, speaking of that, a good idea to have a look at the euro pound, because as you'll see, the euro pound has managed one way or another to stay longer within this triangle. So I still believe that this is going to be resolved to the downside for a move towards at least 84.80. That would be the equality target of the first leg lower to the second leg lower after this corrective rebound. But it still hasn't manifested. It looked like 3 days ago that it might happen. We had quite a strong down day, but we rebounded since. But I do think this is probably a very nice short-term trade here. Might need election results for pound, though, to break higher. Might need, but the closer we get to the elections, the more reliable the polls are going to start being. So I think that if we see a consistent trend in election polls, I believe that the market is going to start discounting the elections result. So I think there is a high probability that if you expect or wait for the elections, the move might have already happened. Of course, it will depend, as I said, on how the election polls do, right? But there is a good chance that the move will have happened prior to the elections. Now we have a question about the Aussie, and that reminded me to also mention the Kiwi and the Aussie Kiwi, which I wanted to do so. Now, if you remember, we made clear here that we have this descending channel in the Aussie. We're getting rejected again and again from the 61.8 of the last move lower. Of course, that means that we also remain within this descending channel, and you might not be able to distinguish it. It's not easy. But here is also the 200 daily moving average. You can see it was almost on top of the channel. So, and the slowly confluence into the 61.8, right? So nice triple confluence of resistances, quite soon at 69.30. So there's no question about it. I mean, if we break above these areas, I think that the Aussie is going to extend higher. But until we do that, the risk reward still favors following the trend, which is lower. And the exact same thing, and that was the chart of the day several days ago. I made that chart of the day, as I also wrote about the double top in the chart of the day. This is free content, by the way. So if you go to Forex Analytics, go to the blog, you'll see that this is the Euro USD November 5th. I wrote this, writing here about the double top. Right there about the double top. Following a strong move, blah, 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 in danger of a double top. And like a day earlier, I wrote about this, saying that here in the Kiwi, we have the following situation. This will either play as an inverted head and shoulders formation, breaking up to the upside, or we are going to get rejected from exactly there and continue lower, because that was a pivot in essence. Okay, that is why it is important to determine pivots in a market. I mean, it's areas where you know that something is going to play out as a binary event. You break higher, you're going to have follow through. You get rejected, you're going to have follow through. Okay, so that was an important pivot, 64.25, and so far we seem to have gotten rejected from there. Now, is it impossible that we will still end up building a right shoulder here? No, it isn't. I mean, there is still time for us to move higher, retest at the neckline and break higher, and have some symmetry in this inverted head and shoulders formation. There is still time, but it has to happen very soon. Otherwise, this was simply a consolidation below major trend line support, major area of support. You can see it here, acting as resistance, and we're headed lower. Okay, so 64.25 remains a very, very key pivot for the trend there. My pleasure. See, could you look at USD SEC? Yeah, we already did that. Actually, I hadn't seen your question, but we did that. So USD SEC, as you saw, holding like a champ the ascending wedge, which means that there's not much to do yet. I mean, we might spend even more time consolidating within this contracting range, because an ascending wedge is always a triangle, right? And as a triangle, the distance between its two sides keeps decreasing by the day. So effectively, it is a terminal formation in the sense that inevitably there's going to be a breakdown or a break higher. Now, I see more possible the breakdown, but it didn't happen like 2-3 days ago when we were testing support, so it might not happen for even a few more weeks, right? That's why we know that we have an important trend line worth paying close attention to, because we've seen it work again and again and again. And when something consistently works, it means that the market puts value in it. It means that it is indeed powerful enough that when eventually it breaks, it's going to lead to even an explosive move, right? And that is no magic or accident. It's simple that, many people are watching the same things. So, they're using these trend lines to place their stops or their limit orders. So once you get these formations breaking out, you start tripping over all those, orders, and that in essence accelerates the move in the direction of the breakdown or the break higher. My pleasure, Hamid. Have a great weekend as well. Thank you. Okay, so Coach, yeah, go ahead.
Yeah. Oh no, I'm just turning my mic on. Norm is here whenever you're through, but
No,
go
I
ahead.
think we covered things. So
Well,
yeah.
one more thing. Can you show your daily? I'm looking at it on the Kiwi US dollar. Full screen it for me, please.
There you go.
Oh, okay. Everyone look to the right-hand corner of Steve's chart there. What you see is the face of a happy subscriber of Forex Analytics. Look at that smile underneath. And look at that, right now our subscribers are putting in their right shoulder, and they'll be breaking out again for the rest of the year back over 6430. So anyway, I wanted you guys to see what it looked like if you became a subscriber. Very nice artwork, my friend.
You see,
Huh? I mean, huh?
I'm the son of two architects. There you go.
Oh, okay, all right. Yeah, I thought maybe you let Jason draw some lines on your chart. Anyway, it's good to have.
I assume he's going to need a few more years for that.
All right, that's the happiest looking chart I've seen in a long time. With a smile, you see the two eyes and the nose, and anyway, that's the way most people that are in our trading community feel. So, Norm, without further ado, Steve, have a great weekend, buddy.
You do, Coach, and everybody else, enjoy the weekend and get some rest.
And thank you again for all your hard work to serve the FX community. Norm, it's been a while. I'm now promoting you to panelist, and now I'm going to unmute you, buddy.
Can you hear me now?
Got you.
Okay.
Got you, Norm.
Get my notes up there. You might want to give me some
Okay, so you know how to share the screen. You go to the green box that says share.
Look for a green box. Okay, there's a green box. Okay. And I think I see it.
Yeah.
There we go. Do you got it now?
Yeah. Got your notes.
You need that black bar at the top? It went away.
Yeah. No, we have all your notes here, your review from October 24th to November 8th.
Righto. You might want to give me an introduction, right, Dan?
I would love to give you an introduction. Norm is part of a generation that spent a lot of time looking at the trading masters. In fact, he started, I believe it was in college, starting to look at astrology, probably to pick up chicks is my guess. But then he started noticing how things could work in the markets. He spent time on the CBOE floor as a trader in Chicago. And if you want to learn astro, I call Norm our astro man. Norm would be a great source for you to learn about trading aspects using the planets. How was that, buddy?
Pretty good, thank you.
Okay, so take it away.
Just to follow up on what you just said, I started studying the markets when I was at age 15.
Okay.
I was, stumbled on the astrology while I was in college and started investing while I was in college and did quite well. And that led to my buying a 1975, buying a membership on the fledgling Chicago Board Options Exchange. And then I was there for 12 years. And during that time, I also had an opportunity to trade on the Chicago Board of Trade floor too for a while. So nice. I did that for 12 years. So I've been doing this over 50 years. My letter, which I started in 1978, it's just had last October 31 was the 41st anniversary of my letter.
Congratulations, buddy.
Thank
That
you.
that's
Right.
just like trades, many analysts come and go. So still doing it for this length of time shows at least one real admirable quality: perseverance. Perseverance.
Thank you. So if you can, the folks out there see this on their screen, I would recommend you take a screenshot of these different planetary events so that you can go back and check later. And there we go. There's we're starting on back a couple. I thought I'd go back a couple weeks so we can learn what might have happened and so forth. Otherwise, we won't learn much. Just looking ahead, you don't learn anything. All right, there we go. There's all your events. We got different planetary events, and with the different planets and different signs that are associated with different markets. That's what we'll be looking at. Just for example, here on the 24th AC after the close, we have Venus doing something. Get the important point at 0 south latitude as the planets go round and around the sun, like horses on a carousel. Not only do they go around and around, they also oscillate up and down. And when they get to the midpoint, 0 south latitude, then that's an important point. And that the Venus markets are cattle, copper, cotton. The stock market is the big basket of everything, so it responds to just about everything. Sugar and wheat are the other Venus markets. So when we have these different points, another type of point we have is we look at the what's called a natal chart. That's when something began or something was born. And so we take a snapshot of the planets of that important moment, like when the U.S. began on the 4th of July, 1776. And so then Jupiter on this point was 90 degrees where Neptune was on the 4th of July of 1776. So that we'll be looking at, in the U.S. points, we're looking at U.S. financials such as stocks, T-bonds, the U.S. dollar, and in this case, because the U.S. Neptune is involved, the U.S. oil. We'll see if that works or not. We also have your moon, which I've been on your show before, and I often tell the folks that to watch the moon. It works for financials, grains, precious metals. In this case, because it's in the sign Scorpio, we are running a special on cocoa, hogs, and T-bonds. So that's going to be included under financials, of course, is your stocks, T-bonds, and currencies, right? So
So
here we
we
go.
have a full moon coming up, Norm.
That's why I asked to come on now.
Yeah.
So we'll be talking about that in a little bit here. All right, so we got Jupiter to the U.S. moon again. So there's your stocks, T-bonds, and U.S. dollar. And here we go. We got Mercury turned retrograde in Scorpio the morning of Halloween on October 31. That's your Scorpio is your cocoa, hogs, and T-bonds. And
Norm, can I ask you a question? It's not market related, but a friend of mine was talking about Mercury in retrograde.
okay.
And I don't know if it was in his sign or not, but he needs to have a surgery. And because of that, he postponed it until that passes. What do you think of that?
That's kind of a general rule. I don't know about surgery. I don't know if I do that for surgery, but generally you don't want to do anything important when Mercury's retrograde. The rule of the theory is that if you do it under Mercury retrograde, you'll probably have to repeat it or do it again.
Okay, cool. Thank you.
So don't sign any important documents or contracts when Mercury retrograde. They'll probably have to be redone. There was a study back in the late 80s on California real estate. They found if the closing was done on Mercury retrograde, 80% of those all got busted. They had to be redone.
That's something else. I'm glad I brought it up.
Yep.
So, I shouldn't sign any prenups until that happens. Then,
Exactly.
either, right? Okay.
Exactly.
Thank you, buddy.
You get married, Dale?
I have to get divorced first, but anyway, yeah. So go on, buddy.
Don't sign your divorce decree under Mercury retrograde, right?
Oh, don't worry. That's going to take some time. All right. So,
I'm sure you don't want to go through that hell a second time. Right?
No, no. I don't, buddy. All right.
Okay. So anyway, you got your Mercury markets are the moon and Mercury are the keys to the grain. So you got corn, oats, and I left out. I see the left out soybeans and wheat. I left out soybeans. There's wheat.
You know, I had someone on that showed the beans on the verge of a breakout. The grains
Okay, well,
are
I'm going to
worth
be
paying
showing
attention to now, aren't they?
I'm going to be showing the bean chart here in just a bit.
Okay.
Okay, we got Saturn. It's lining up with Pluto in the sign Capricorn, and so that's Pluto is cocoa, hogs, and T-bonds, and then your Saturn is coffee.
Is Saturn representative of depression or melancholia?
Yeah, that's correct, Saturn.
Okay. So when Saturn planetary alignments happen, is it usually a negative for, say, equities?
No, you can't make a, it might be,
Okay.
what we're looking for is change in trend points. So,
Okay. All
things
right,
under astrological theory that normally you would say, oh, that's a negative. Sometimes the market does. Sometimes bad news is good news.
Right.
They don't want the economy to overheat. Da da da. Da. And so then it turns out to be a high rather than a low. If it's a
Inverts. Yeah.
inverts,
Okay.
exactly.
Okay.
It's better just to look for change in trend points and not to get too hung up on the theory. Than
You're right. That's
ideal
good for having a beer and chips.
ideology. In the markets,
Yeah.
the markets have their own way of doing things. So. All right, I'm going to go over these charts alphabetically mostly. Here we go. We're going to start catalyst first alphabetically. I have this Venus point here, back there. There we go, just to get you acclimated. Venus, the cattle from the night of the 24th, opening to the 25th. There it is, and it didn't do anything. So that's a red arrow. That's a miss. I'm going to show you the good, the bad, and the ugly. Okay. Here's cocoa. We had these 3 points, green arrow points here for the cocoa, and you see that worked okay. You had a rally here. I like to sell on strength and buy on weakness. I think that gives you an advantage. So here we are. We'll be selling here on that opening, and that worked. You had a little dip there, and that you had a chance to make some money. Then we kind of chopped sideways, and then we had a little bit of an uptrend there, and you sold the next day on the opening, and then you had a nice dip. And again, there's a nice little top there, and we sold there, and you got a dip. And so you had 3 chances to make some money in cocoa. Here's coffee, did not work. That was it should have been a big point for coffee, but coffee didn't care. Coffee didn't behave. Usually it behaves, but not on this point. Copper, you might want to add up my green arrows and red arrows. I added it up last night. It looks bad here in the beginning, but it gets good. There we go. So I think end up with a lot more green arrows than red arrows. There we go. So if you want to keep score at home, that's okay with me. Let me know. I'll tell you what I think. And when we get done, there we go. There's copper. That was supposed to be a point there for copper. Didn't work. Here's corn. Corn's good. Corn, we had a dip there, and next day we made a low. Only went a couple of pennies against us. Corn, if you're not familiar with corn, a penny is $50, so it didn't hurt you very bad. And then we had a nice rally. You had a chance to make some money. You got out of your lungs and went short there, and that was good. And then you had a nice decline there, and you could have made some really nice money off of that. All right, there was probably a moon there too. Yeah, oh, that's the moon right there, the first green arrow. Then we had Mercury going retrograde there the morning of the 31st, and that was that top. So you can see Mercury and the moon worked pretty well. Okay, cotton was going, I don't do sideways. Market was going sideways. So I put a little green box there to show where you were looking to do something, and if it's going sideways, we don't do that. We follow Newton's law. For every action, there's an opposite equal reaction. If the market's going sideways, chances are it's not going to do much. And you can see if you just do a mirror image from that point back a few bars, going sideways led to more sideways. So Newton was right. Can you believe it? 400 years ago.
Yeah, sure. Gravity.
There you go. His arguments had gravity. All right, there we go. Here's gold is rallying there to the moon. If you sold there, you got a little dip there, you had a chance to make some money. Okay, here's hogs. Here's taking a pass here on that spot there, going sideways again. But we did rally up to that point there, and so you could sell there. And then we went down, and then you had a chance. There's the bottom there, and the next morning is our window to get in. And if you bought there, it popped up, and you had a chance to make some money. Here's crude oil. That was at one point to the U.S. chart involving Neptune. Neptune is oil. And the only point I had for oil is right there. And that's a pretty nice stop right there. And you had about a 4-day decline in oil. If you're not familiar with oil, by the way, every handle, every big full number in oil is $1,000. So if you go from 66 to 65, that's $1,000. Looks like we dropped about two and a half there. So that was pretty good money in about 4 days. Here's silver on the moon, the silvery moon. Gotcha. There's the top there on the 25th over the weekend was the moon. And then the opening there was right there on Monday. And that was a little nice little top there. And then you decline, it went down. Here's your beans. Beans missed on that on the moon. It dropped and then went sideways. But over here on Mercury retrograde, you got a nice low there. I think that was the low of the month, I believe. Then you had a nice rally and so forth, and that worked out for the beans. Here's your S&P going kind of sideways here into that window for the moon and several other things. So it took a pass. Here we had another big point window here over the weekend. That was a big cluster, and that kind of didn't. If you sold there, you might have had trouble. Yeah, you didn't lose a lot, but lost a little bit. Stopped out probably. Here we have a rally into this window here.
Yeah.
And you had a chance there on that little pullback to make some money. And then it rallied again up to here. And then again, you had a little pullback into that low there. And then you had a chance to go long, cover your short, go long, and make some money into the about a day or so ago, you know.
And your recent signal is a sell from yesterday?
On my sentiment number, if you were talking about my update.
No, I'm talking about the green thing all the way to the right above the last candle or bar.
Over here?
Yeah, what's above the bar, that shape?
Oh, right here. That's the opening of the 7th.
Okay.
Yeah, so we were looking for a little bit of a top there. We kind of got a pullback right around there, right? I think.
Right. Okay.
Yesterday, the market, although opened on all the time new highs, it closed rather weak. You know, we didn't close. It closed rather down quite a bit from the highs. You know.
Yes.
Oh, I got the S&P on here twice. Sorry about that. I'll just ignore that. And I duped the same chart. Here's sugar. Had it kind of made a low there. You're near the low of the month there, so not too. You're still within the range of the low bar, so you might have gone long there, and then you had a chance to make some money. Here's T-bonds. There's our sideways again. We don't do sideways, so but on that dip there into the moon, we'll be looking to buy, and then you had a very nice rally. If you're not familiar, bonds, every handle, every whole number, a handle is a whole number. On bonds is $1,000. So if you go from 160 to 161, that's $1,000. We did that about, looks like we went from about 159 up to about 161. That's $2,000 in about 4 or 5 trading days. That's some pretty nice money there. So anyway, you had a big window there for a change in trend. We got that. And we rallied up here to that change in trend. That was the top. And then we've been coming down, and we had a miss there. But then we had a little bounce there. And you had a chance to make some money on that. And here's your wheat going sideways there. So we'll take a pass. But with this dip here into, as the moon and another